ocean will be down on straight on you with me feeling.
Good afternoon, everyone. No, actually, completely wrong again. It's still good morning, isn't it? Until next week when we realign with the US for daylight savings. How are we all doing today? A big shout out to everybody that's watching this live with me today. We've been getting about 4,000 or 5,000 people for these shows recently, which is just awesome. A big shout out to all of you, as well as everybody that's watching this on recording as well. I know not everybody's able to watch at this time due to work commitments, sleep, etc. So how are we all doing today? Nice to see Bitcoin holding some key levels. Nice to see crypto looking quite good. We're going to kind of have a bit of a deep dive today into what all of this really means. You know, where is this coming from? What are the economic conditions that are underpinning it? And what are the risks that we're facing at the moment? You know, as we start to see some altcoins really starting to rip. While some others really kind of hang back. So once again, are we in this situation where we're in a very narrative-driven market? Are we seeing any consistency with what's coming across? And these are the big questions that we're always asking with the trading team over at the Bird Nest. So at the moment, I think we've got this kind of little bit of a window of opportunity here in crypto. And I'm going to tell you as for why in a minute after we cover the news. Evil Gemini, Ben, my friend, good morning. How are we doing? Big good morning to everyone as well. Apologies if I don't see you in the comments. It doesn't always come through to me here. But if you are saying good morning, a very good morning to you, good afternoon or evening, wherever you are in the world. So you can see I've got the Bitcoin chart here. I just want to start as this is kind of a proxy. I know we kind of look a lot more towards our altcoins and our chart requests on Wednesday. So if you do have any tickers that you would like me to cover, then let me know. I'll make a note of them and we will step into it. All right. So we're going to start with Bitcoin. Then we're going to take a very quick look at the news. We're going to take a look at what the equity markets are doing. We're going to look at how the markets in general seem to be reacting at this, what I would call this, you know, in sailing terms. And I love the fact I'm using sailing terms. I love to scuba dive. I love the water and I love being part of marine conservation programs, big passion of mine, but I get so seasick. But anyway, so nautical terms for you, just for the irony of it, you know, is that I think we're kind of at this slack water situation, right? Or we've got those very calm seas at the moment. And that's because the markets are just kind of in this state of flux. They're in this kind of, or more a kind of state of positioning right now, okay? We've got April 2nd bearing down on us, which is when the tariff news starts to come through or when the tariffs start to get implemented by Mr. Trump. So at the minute, we saw a little bit of a move higher in the dollar yesterday. We saw some stocks starting to pull back a little bit. We're going to take a look at the NASDAQ and the S&P 500 as well, obviously, as we use that to kind of plug into this barometer of risk that we try and paint on a daily, weekly, monthly basis as to how the markets are positioning themselves for the risk bid. We need to always remember in crypto, we can get quite caught up in this industry, right? Which is wonderful in so many ways, but in other ways, it can leave us a little bit blinkered sometimes that we are, you know, as a major risk asset in this industry, crypto is very, very much you know, at the behest of traditional markets as well. So we're going to take a look at that. We're going to look at the dollar index too. And then any chart requests that you guys have that I'd be more than happy to take a look at. Robert, good morning. Dominic as well. Altcoin, Hodler, love it. And Horace, yeah, Render, certainly, mate. We will take a look at Render. So we're going to take a look at ETH as well, but if you've got any other charts you'd like me to take a look at, they can be traditional market assets as well. I know it's a bit more of a crypto crowd here, but maybe if you're trading Forex or anything like that, we can certainly take a look. No problem. Okay, so before we get on to a quick news segment, let's take a look at Bitcoin and where we are. Now, I'm here on the 4-hour chart. I think for me, this has got the kind of most context at the moment. B, hello, mate. Thank you very much. I will zoom out to the higher time frames, but just to kind of go through with you what we've been looking at with the team and with members over at the Bird Nest has been this play out here, which has worked just really, really nicely. We've come up, cleared through this daily gap here. We set the daily order block, so we're looking for price to hold this area. Now, on a daily scale, that's great, but then on a 4-hour scale, I want to kind of find some confluence within that. All right, and what do I mean by that? Well, if I want this daily order block, if I want this area to hold, and it's a large area right down here, then I want to find areas whereby we've got, you know, aligning order blocks, or areas where I can tell the buyer stepped in previously, or, you know, one of my favorites are looking for these bias, excuse me, bias aligned gaps. By the way, if you can hear any birds singing, and for whatever crazy reason that offends you, I don't apologize for that. Bird singing shouldn't offend you, but hopefully it's not distracting. We've actually got some sunshine and some warmth here in London today, so my gorgeous husky is just sunbathing on the balcony, which is just across the hall from my office. So nice to hear the birds out, nice to see the sun out, and nice to see crypto looking sunny side up. So anyway, back to the charts. Right, I hate it here. Good morning, mate. So we've got liquidity resting above these highs, right? These failure swings here and here. Price has established itself now above the order block. Now, I'm not saying this thing's just going to moon and do 200K overnight. At the moment, we're still very much in the process of playing this level to level. We have some massive, massive catalysts that can hit the market. All right, so that's what we need to look to. Dominic, yeah, always, often in a positive mood, but actually, it's really nice to see the sun up. The team have been trading exceptionally well through March. I mean, we're going to print the figures as we do every month at the end of this month, and obviously the quarterly figures as well. And they're, you know, I'm really, really proud of everything that they've done. Members have been benefiting, the team have been benefiting massively, and it's just, you know, they do say to you, if you love what you do, you never work a day in your life. Now, some part of that is true. I absolutely love what I do, but we work insanely hard in this industry, and that's something you have to kind of come to terms with. But I like that side of it as well, in truth. So yeah, up nice and early this morning, sun is shining, everything's looking good. Get to be live with all of you legends, so nothing really to complain about here. But appreciate that, Dominic. So look, quite simply, the idea was this: once we inverted this gap here, so again, bearish gap here, bullish gap here. So the actual playbook for this was really super simple, right? So if we got the close below this, yeah, let's do that in black. So if we got the bearish close below this, then looking at this lower gap, but ultimately for these lows down here to be targeted. Thankfully, we didn't get that, and we got what we were hoping for, which the phase one plan was, which is holding this gap because we're bullish on the higher time frames, looking for these bullish areas to get involved on the 4 hour. So, you know, some good orders going in here, and then the inversion and retest of this obviously then led to this pump here. Now we have had this retrace, but it's fine because we're still holding this key area of support. So while we're doing that, what are we looking for? Well, I've got this highlighted up here, which was the target that we outlined previously. So that's still very much in play. And then we have some internal liquidity in the form of this high, which actually makes these relative equal highs as well. So I think price is really looking to kind of gun towards that today. Now, just to kind of give you that context on the higher time frames, all right, one thing that I do really want to see, I would really like to see today, which we failed to achieve yesterday, and I thought that we might do, is closing above this gap, right? I'm just going to do this in red so you can see the significance of the fact that it's bearish. Now, for me, this is kind of a sticky point here. Now, I wanted to see the close above this on Monday. We didn't get it. Tuesday, we set a doji. And for those keen-eyed amongst you, will also notice that we've set this inside bar pattern, the low and high of this candle and the low and high of this candle. For anybody that wants to know how to trade that pattern, you can find it pinned to the top of my Twitter profile. Let me just pop this on here for you guys, which is BC_Richfield. There we go. So if you get the opportunity to go on there, do take a look at that. Also, if you're not on there, if you do like the content, please do give me a follow. It would be really helpful, and like the videos and that as well. Really does help the algorithm on things like YouTube, helps with Twitter as well. And also from a personal point of view, and I don't really ask much from you guys, I'm very close now, I think, to getting about 10,000 followers. So I think that'll be a really nice milestone to try and get across. in the next kind of hopefully few weeks or few months. But for the education stuff, lots of stuff is posted on there, as well as any offers that we're running as a group, which is over at the Bird Nest, and anything individual education is all free from me as well. And you can find the inside bar pattern at the top there. It's a very, very interesting traditional market pattern that we use when markets are starting to consolidate a little bit, but it gives us a really good range to trade. So anyway, I don't think we need to be going up any higher than this at the moment. This is really simple. Close above that, then basically this happy box here turns purple. And just as we saw on the 4 hour, yeah, remember this isn't purple at the moment. All right. But as we saw on the 4 hour, this is what we're looking for here. When we invert these areas, yeah, these bearish gaps, we then look for them to hold as support. And that's what we're looking for. So we're just taking this from one time frame to the next. We're finding this bias, we're identifying our key levels in the higher time frames, moving down through the time frames to ultimately make that plan. So as we can see here on the 4 hour, things are looking really healthy. Price is pushing up. Liquidity targets or main targets are resting here at 88,520 and 88,748. Again, nice round number, this one, 88,520 flat, yeah? So, you know, make of that what you will, but very difficult in these kind of markets to end on those flat numbers, but it's amazing how often you see it at key levels. Not saying this is a key level necessarily, it's kind of just a little bit of random internal liquidity to the larger range. So I would still expect us to move to the external target as well. However, the next thing we can look for a point of confluence, bearing in mind we only have 45 minutes left in the hour, is looking for this. Now, remember, this isn't set yet, all right? But if we close above this, we've got these down close candles here. If we close above this, yeah. Well, actually, sorry, my bad. We have closed above this, so we're getting a perfect retest of this here this morning. This is looking really nice, actually, for a base to push up. It's a slim close, but at the end of the day, it depends how you look at that. For me, slim close, larger close. If it's a close, it's a close. Just kind of helps you stay a little bit more consistent. So as we saw here with this order block, yeah, these down close, consecutive down close or bearish candles, price close above, we look for this area to retest and push higher. So that's exactly what we're looking for here on the 4 hour as well, which is really, really nice. Now, we've got about an hour and 15 minutes before the New York pre-market open, and then an hour longer before the market open. We don't actually have any red folder or high impact news events today. Yeah, so that's what we need to kind of factor in. We've not got that kind of injection of volatility, but it also means that besides any kind of media black swan events like Trump coming out and berating crypto or something happening that injects kind of some negativity into the market and markets retract from a risk perspective, then ultimately we stay aligned with our bias. And if we're expecting higher, then we are expecting higher. So let's take a look at this. Yeah, sure, I hate it here. We can take a look at Pepe as well. No problem. Just something that I want to take a quick look at before we go on to that is just to look down here as well right now. My boy Pitt, wonderful trader who's with us over at the Bird Nest, price action trader, will be elated that the total charts are looking a little bit better. But as he reminded me this morning, they are coming into an area of resistance. So we do need to be a little bit careful with that. My boy Ionic, oh man, what a dude. FA trader, really sick guy. You'll find him on Twitter. But telling me how, you know, they've been looking a lot closer at Solana BTC over ETH BTC, right? To see these kind of, to get these opportunities for these moves. And actually, if you look at that, what a shrewd thing to do. You know, we had our structural breakdown here. You know, you're talking back over the weekend, and it got you into this move really, really early towards alts. Not all of them, right? You always have to be selective, right? But it was a very good move. However, what you can see here is ETH BTC was a lot flatter. And then as you look here over like the weekends, yeah, what happened? Price actually just dropped back, and we've just been stuck in this kind of consolidation. So yeah, for anybody that's interested in that, like I say, new information to me, but something I found really interesting. So I was monitoring it heavily when we had this breakout over the weekend, and then back testing this as well, not to the extent I would to use it day in and day out, but knowing Ionic as I do, and knowing, you know, what a hardworking chap he is and the information, the time he puts into this, I found this really interesting. So maybe something you should, you know, take a look at as well, and look at how that affects us. Looking at this to kind of play into when we're going to be seeing strength in altcoins. Now, much more my bag is looking at this, right? So a couple of things that make me cautious today, right, is that we've got the dollar a little bit higher. All right, not a lot, 0.03. At the end of the day, the dollar's kind of stuck down, ranging around in here at the moment. Let me pop that on the daily. We've reclaimed this range here now, and we're just kind of holding below the range low. Ultimately, I think, when you look at what's going on in the US at the moment and the fact that, April brings two really big things to the past, which is the tariffs start to kick in on April the 2nd, and also the US are then looking to refinance a large chunk of their multi-trillion dollar debt pile. By doing that, they're going to want the bond yields to be down. All right. So this is something we're keeping an eye on as well, is the US 10 years is our kind of, as our gauge here for what the market, for how Trump is succeeding to get these markets down. I think a lot of the tariff noise, a lot of the media, everybody knows what I would say a good user of the media he is. That's not even the best English, but he's very proficient in getting what he wants out of out of anything really, and he wields the media like a weapon. The media is a weapon, a huge weapon, and a lot of this noise coming out about tariffs, a lot of this noise coming out about other areas as well. Look, the tariffs might be as extreme as he's saying, or they might be just a bit of a ruse to get people to the negotiating table and put the US in a stronger position. Underneath it all, what I really think is happening here is a lot of that noise is designed to try and drive down the dollar and drive down the bond markets. And people say, BC, why the hell does that make any sense? And it doesn't on the face of it if you think about it, but it really, really does when you think about it in conjunction with the US debt and the refinancing and the potential for quantitative easing and the lessening of quantitative tightening. So why does that make sense? Well, quite simply, when the US refinance their debt, they're going to buy a lot of these bonds back. Yeah, so when you buy a bond, when you buy a treasury note, etc., you are buying US debt, and they give you an interest rate for that known as a yield. So you see this is at 4.338% at the moment. You can see it up here at the highs, right? When it was at 4.809% on the 10-year, right? This was just back in mid-January. Now, if they refinance trillions of dollars of debt at that level, that means they're having to pay out almost 5% in interest on that debt that they're refinancing, and they don't really want to do that. Not when they can, at the moment, get this down to potentially 4%, or, that's why I've got this level here. I think this is probably the minimum that they would want to drive it down to. I think they want it as low as they can, yeah. So I think you're really looking down, if we kind of go back to a weekly here, you kind of get a better idea of some of these range levels, right? This, to me here, I think is quite a key level they're going to want to push price down. It doesn't look that clean when you look at it from here, but ultimately deviation, sold away, resistance, price back above, perfect retest here, deviation back above, retest. There's no doubt that this level has played a role here. So in and around here, I think they want it down in the threes. So we need to keep an eye on that, right? Ultimately, if we're looking for a lower dollar, as we were discussing as well, then, often that paints a little bit of a better picture for risk, because it shows that money is coming out of the safe havens, which are things like the dollar, which are things like the treasuries, the bond markets, for example. But also, and this has been a very difficult one to judge off the back of this, but also gold, right? Now this one as a proxy has been very, very difficult, right? Because this thing has just been on a tear. But what it kind of tells you really with gold is that this is a, physical limited asset. There's only so much of it in the world. And now this kind of flight and the strength that we've seen in gold, I always think about how happy Peter Schiff must be. This to me is very indicative of the fact that people are really clawing, or not just people, but institutions, etc., clawing to get more gold on their balance sheet, right? Because it's seen as that safe haven bid. Now, the other thing that we're noticing here as well, and we don't want to be quite down on this time frame here with the VIX, but we can see here as well, right? We've had this nice situation where we've had this kind of sell-off in, or the volatility index has been going down since March the 10th. So let's take a look and see how kind of Bitcoin overlays onto that, to see if there's any real correlation. And what you can see here recently, if we take this high to low, let's just do Bitcoin in green. Yeah, what you can see here is how the volatility index, has been dropping. Yeah, and when it was rising back here, we can see that the price of Bitcoin was dropping as well. Again, it's not always completely in correlation, right? We're using this along with a number of other factors. But what we can see at the moment here is as this continues to sell off, or drop the volatility index, we can see this is giving nice clean air for Bitcoin and some cryptos to start rising back up. We can also see that along with the NASDAQ, right? So if we add the NASDAQ on here as well, you can see the NASDAQ here in nice correlation with Bitcoin, both representing our risk assets. So with that in mind, we can take a look also to the risk markets, right? Or in this case, the indices, the equities. We're going to look at the ES, which is the S&P 500. We can see this is really looking nice and healthy. And then also with the NASDAQ here as well, which we can see is in a really nice uptrend as well. We kind of reclaimed this high time frame level here. This was the inversion we were looking at. And then we've held this really nicely and pushing up. Key liquidity for me, or not key, but kind of, this is the area that I think we're going to move up to 21,121 or into the 121. So let's see how that kind of pans out. Ultimately, while risk markets are looking good, and while things like the dollar and bonds are, retracting a little bit, ideally we would see the same in gold, and we've already got a low VIX, then that's what we want to see. So today, as an intraday specialist, I'm not going to go into that too much detail. Obviously we cover that, and we will be covering that in 45 minutes from now on our live trading show. And I know most people that attend the kind of public live shows like this are more high time frame traders anyway. But what I'm looking at today is I'm kind of weighing this up in my head at the moment and saying, okay, are we in for kind of like a midweek corrective move, a little bit lower? Yes, there's uncertainty in the market. We don't have any red folder or high impact news coming through today. We have got some information coming out of China, which I'll cover with you as well, which is that China stocks are looking very strong. Actually, there is an expected retraction at the moment, which we've seen a little bit of. While they kind of still try to process and price in what's going to happen with these tariffs, which nobody really knows about. However, they're really starting to come into their own now, China, and obviously they've got fiscal easing going on at the moment as well, meaning they're injecting money into their economy and they're making some really good and appealing conditions for investors and for progress over there. And they've moved away from this kind of model of this kind of China was always known as almost like the kind of the copycat kings. They would take these they would take other products and they would be able to manufacture them cheaper and to a higher standard. Well, now actually they're very much at the forefront of innovation, technology, production, manufacturing, cars. We look at BYD, for example, the stock roaring on that in the face of competition with Tesla. So it's a really kind of interesting dynamic out there at the moment in the markets. However, one thing that we're really going to start to pay attention to tomorrow when we come through on Thursday is we've got final GDP quarter on quarter in the US, and we've got unemployment claims. And GDP is going to be a really interesting one because the markets will look at that as kind of a health check for the US economy. And we've had some very mixed data. We've had some really good kind of PPI and CPI prints, that's looking at inflation that hasn't really washed through into the positivity of the markets. Now everything's kind of gone a little bit flat. It feels like the market's starting to digest and process the very worst of the news from Trump. And when I say the worst, I mean in terms of the effect of those tariffs. Markets don't like uncertainty, and at the moment there's a lot of uncertainty in the space because people don't know how these tariffs are going to play out, and they also don't know about policy either. All right, so with that little update for you, I try not to kind of go on about that too much. I think it's super important. It's played a huge role in my career, obviously from traditional markets coming across into crypto, so hopefully that does help. But we are going to now jump back in and really put our focus here back into the crypto side of things. All right, so let's take a look and let's start with ETH. Right, let's see how did the ETH plans that we set up for the week, how have they been looking? All right, so let's dive ourselves out onto here. So as we said, we're holding our big grey box. You might just think, Jesus, BC, these are massive areas, right? Well, we can hold this off at the moment because the green box is where we're talking about accumulations, right? So for example, I added ETH. Where were we? Added ETH on the reclaim of here, right? Added again when we got back to here. Why? Because when we broke out of this area, we saw a really nice pump. Added again here, got a really nice pump. Again, this is talking about spot bags. And then I added again here, and now we've kind of dipped back below. So I'm saying, okay, well, if ETH kind of came down into these areas here, yeah, and I'm not saying it's going to, by the way, but that's where I'd be a really interested buyer as well, okay? And actually this area here, we're not far away from this here, but this was a key consolidation here that led to a massive pump. I'd be surprised if the buyers aren't stepping back in there as well. So just so that it doesn't kind of distract you, I'm just going to hide that off the charts for a minute because we want to look at kind of, we're in the conditions where we can sort of start taking some positions outside of spot or intraday plays again now. So the grey box here, as you can see, when you kind of hold back, it's just a really key kind of SR level or key pivot point. Resistance here, support here, leading to big pumps. Lost this area here, retested it as resistance, reclaimed this, good retest of this area, big pump. Now we're not kind of below this yet. What you want to see is, or I want to see like a move down and a retest and something like that. All right, and then again, obviously, like we said, targeting these key areas of consolidation before these kind of big pumps is where I'm just looking to accumulate more in terms of spot holdings. But if we're looking at kind of taking this on in a trading manner, then what I really just want to know about this is that this area is holding. All right, and as we kind of move back, we can see, okay, we came back into this minor consolidation. Price is kind of holding this area. We're not seeing those sharp moves below. In fact, we see the long downside wick here, or not long, but long enough to show absorption coming in here from the buyers. All right, price opened here, obviously, moved up, got sold off, but then recovered here nicely. If we had a much bigger body close here, I would have been looking for the retest of this area to sell off. Ultimately, we didn't. So when we stepped back in here, we were saying that we were expecting expansion towards this area here, which we're just going to look at on the daily. Now we can see when price stepped back in the areas that we were looking for. Let me just get to that for a moment. Just from a different time frame, you can just ignore these for a minute. This was the key area, right? When price expanded above here, setting this was that first kind of change. Then we inverted this gap here as well, which actually kind of held all the way through here. So from here, we looked at this bullish gap, and the plan has just been very simple. We're just looking for these areas to hold, to set new order blocks like this. Bullish order block here, expansion. Price comes back down, reacts at the bullish gap, retest the bullish order block. I don't know why anybody would want to be a short in an area like this, but obviously some people were. They got absorbed, price then moved up. And ultimately, we're looking for these equal highs up here, and then we're looking for this daily order block to be set. We got the daily order block set on Monday. So now while this area holds, we're just simply looking higher. All right, looking higher. Right, so we're still in this area here. We're holding this box. We can see what the plan was from Monday from the arrow. We've drawn back down into here. We got that nice pump, got some nice intraday plays on. Ultimately, price had this little bit of a retrace here, but we're not having any kind of structural shift. We would need to see price back down below this low here before looking for any kind of potential moves lower. Okay, so in terms of ETH at the moment, holding some nice levels, and something I really like the look of here is all this resting liquidity. All right, that's just going to be really, really attractive for price to come up here and rip through that. If we want a little bit more confirmation than that, then again, looking at this to be set here as an order block. So 4-hour order block gets set. We could look for something like this, price to close above, any pullbacks from here, then giving us the opportunity to move into long plays higher. Excuse me, right, bear with me 1 second to have a sip of tea before it goes ice cold. So that's where we are with ETH. Now, it's no secret that we've seen ETH, lagging. We haven't seen those massive moves that we've seen previously. That's why I like the idea of looking at, Solana BTC here, right, as this kind of proxy for it taking off. Because think about it, Solana drove the start of the bull run, right? Through the memes, everything on the ecosystem, everything that kind of happened off of Solana was really intrinsic to this, where ETH has kind of really led, the previous cycles. So let's take a look at render. Excuse me. So here we are. So on a weekly scale, I remember I think we looked at this one on Monday actually, but on a weekly scale, nice, because we're holding this bullish gap, right? We also come back into this area here, right? So that key high there, closed above, area not retested, gap left here, just perfect, right? These highs and lows that we see, these key highs and lows, especially if they're any kind of external high or low. When you see these moves and you see these structure breaks or continuations where you see these really strong moves above and these areas aren't retested, when time passes and price comes back to these areas here, I always think of it like this. And I learned this from several amazing traditional market traders, but probably none more so than Tom Dante, right? Which is when you're looking at these levels, imagine people that were that were offside here, right? People that were short in this area. Now, I'm not saying people are holding those positions all the way through, but it's a very clean and clear way to think about it. Price then comes back to this area here, you can close out at no loss, right? But obviously, if you're short there and you're closing out at no loss, what you're doing is you're then going to pump the market a little bit. And you're putting those buy orders in. The next thing is that there's obviously key liquidity here. You know, if this was an area on this breakout that led to this massive pump here, we look at this consolidation before price did that. So when price dips back down into these areas, they can be very key areas of interest. Now, we also took liquidity from this local low here. And like I said, we're reacting here at this bullish gap. Amir, yeah, of course, mate. I own so. Excuse me. Right, so let's move to the daily. So basically on the weekly, we can see the plan is really clear. It's a long way off yet still. Down close candle after taking liquidity from the lows would make this a high probability order block. Should we set it? We need price to close above it. And then again, any pullbacks that we look for here are for longing. Now, we're obviously longing straight up into this bearish gap here, but on that change of delivery there, I'd be looking much more towards what we looked at earlier, looking at legacy markets, looking at equities, looking at the DXY, etc., to see if we've got that risk on environment. And if we have, then these areas can get filled very quickly. If it's still tentative, if there's still uncertainty in the market, I expect this area to cause a little bit of a problem. Now, on the daily scale, we can see we got the recovery nicely. We were looking for this area here to invert, which we got. So again, big bearish gap that's rejected price here and here. And when price closed above this on a daily scale, what do we get? We set a bullish order block down here. We inverted this gap, and this was our target. So we're now at target 1. Target 2 is a higher that sits above this order block here as well. We can see price gunning towards that at the moment. So probably not what you want to hear if you're looking to be involved in render here, but this is a difficult one to get involved in because the run-up has just been super aggressive, right? And in doing so, we haven't really even stepped in to retest any of these kind of order block areas, but we are doing it at the moment. So something I'm going to be interested in here, we haven't quite reached it yet. It looks like it on there, but you can see we're just a smidge away. Yeah, so let me just move this back. This is obviously a super key level. We've swept liquidity from this high now. You see the long upside wick, all right? And that's telling you when you see a long wick like that absorption here, then often you're looking a little bit lower. But what you always want to make sure when you're looking at things like that is what you're kind of looking into. Because if you want to short that, you're just shorting into a bullish gap here and a bullish gap here. Either way, if the higher time frame bullish bias is correct, which we've had, like we said, since we broke out of here on the daily, then we look to these areas to hold and push price up the same way as we do with the gaps. If we came back down, we could come all the way back down to retest this. This isn't something I look to actively short at the moment. To short it, I would have wanted to do the first engagement with this level, because on a lower time frame, it would have allowed me to get involved with it with pretty minimal risk, because I can be in here intraday, make a few R or make whatever, or certainly get my stop secured. And then if you are the wrong side of that and price is going to continue from high up, then ultimately you limit the damage, you get out of break even, or you minimize your risk. You can then, when you see that strength injected back in, you can then, climb back on board with the trend, which is looking higher. So I'm going to pop this in here as well, because this is now a swing high and a key swing high. So that's what I would be looking for on an intraday basis here. To be honest, with render, I think with the target, the kind of next target being up here and that being such a key target, I think I would actually probably sit back here and either be patient and wait for some kind of retrace. I like the daily gap that's down here. I'm not saying that we're going to get it, but ultimately what this gap will do is tell us quite a lot. So when price was selling off aggressively here, what tends to happen, especially with retail traders, is they then say, okay, we're going to oblivion, all in short down here, super leverage, thanks very much, and then they just get blown up, all right? And then you see moves like this that then move higher to hurt them and often step back in with the trend. We get our bearish gap and price sells off. Now, if that was our plan, we could have had intraday longs from here up to the gap. And then here, say, for example, we would have looked to move short. Then we would have been stopped out of the short trades, but the market is showing us strength. So what do? We sit here patiently and we say, right, what have we done? We've set this bullish order block now. Have we set any bearish order blocks? No, because we would have needed to close below this low here or afterwards this low here, all right? So the market isn't telling us that the sellers are taking control here. The market is telling us that the buyers are still in control. So we can be patient. We identify key areas of resistance and we say, okay, well, look, if the market really wanted to sell off, well, that's obviously the low that it would be targeting, right? That's the key low. And then as we look here, we say, okay, well, Why wouldn't it have just had the strength to just sell off there? The market's really that weak. When price starts grinding into these levels, it's showing a bit of strength. And then the key word here, and this is what will screw most people over time, is patience. It's the patience to wait several days to watch this develop and then take your higher probability longs from here to here, but then also knowing on the way up and down how to manage those positions, all right? So again, the signs have all been there, but difficult. I know there's a lot of noise in the market, and it's one of those things where you see a lot of negative sentiment, you see a lot of other things stepping in, and it can just drive you a bit mad. Sometimes if you just move away from the noise, or you have a relatively clear plan within here to say, okay, what are we looking to do? What do we need to see to execute? Try and remove all that noise. You can't, you'll very rarely be able to react to the market news as quickly as you would need to cover yourself, right? You know, there are people, systems out there into the multi-billions sphere in markets that are looking to snipe those positions, make those arbitrage plays, you know, get ahead of the news and stuff. So sometimes if you strip away the noise, you make your plan. You know, if you get that, it's all about execution, all right? And just being able to step into your strategy when it tells you to do so. Anyway, oi, Savaloy, Gordon, how are we doing, my friend, from sunny Bedford? Have you got the sun out today, mate? I hope so. Let's look at the pendle, wasn't it? I'm sure we covered this recently, actually. Yeah, here we go. Okay, so this is a really good one, actually. This is why I like leaving these things on the chart. So we use these ones just for our live show. So let's take a look. What have we been looking at here? So on a weekly scale, we can see what we did there. Again, looking at how price reacts at these levels is so very key. Now, if we draw this one across here, we just want to know if this is left. I can't remember if this, yeah, it did. So it swept this low out and it took out this low. And look what happened. See how price closed back above this level. Now, often when you're looking at lows and highs, yeah, let's just use this one as an example, or we can use this one even as well. In fact, let's use both. And let's do it in a thicker line to really kind of highlight the point. Looking at lows and highs, and in this case, we're going to look at lows on the higher time frame. When price comes into these levels, if you see price close, big-bodied candles, you'll often hear me use this term, strong closes, right? The big-bodied candle tells you that there's a lot of sell-volume, a lot of sellers, right? Not just a lot of sellers, sorry, but a lot of, you know, a lot of selling going on. It could just be one massive seller, right, for example. But it's just the way that I say it's just easier to understand is sometimes for most people, I think, if you think of it in terms of buyers and sellers. So sellers stepping in here aggressively. What happened to this low and this low? Price closed below it. So what do we then look for? I then wait for this candle. When it retests this and gets back underneath, I'm then short to the next key liquidity. Price comes and closes back above this. I'm then looking for relief move higher, probably to this order block or into this gap. Yeah. So for example, with this low, we can see what happened. Price reacted here. Again, when we're doing these lows on an intraday basis, you favor the longs at these lows because you're looking to trade the relief plays of people taking profit or people getting stopped out, right? Also, key liquidity pools that exist under here for the potential for larger players to reverse the market. Ultimately, what then happens, we close below this low aggressively. So what do? We look for it to return to this low and look how it capped price. Now look at the difference with this low. And this is how we got an early stage indication with this close that price was looking for relief higher. All right, so I hope that makes sense. Something I always find, you know, quite useful to monitor how these lows and highs are engaged with, right? Very more of a legacy market thing, right? You do that a lot in FX, for example, and no different in crypto. It's just candlesticks are a visual representation of, you know, psychology, buyers, sellers, positional plays, etc. So on a daily scale, where are we? Well, we could see what we were waiting for up here. Yeah, bearish gap. What do we do when we're in a bearish gap? We short. What was our target here? These equal lows. You see the EQL, right? So we were short here into the equal lows. Brilliant. Now, again, remember what I said. Let's highlight this area again. Let's do this even bigger. That key low there. Why is it a key low? Because it's equal lows between those two lows. And look at the close. Look at what price did when it closed there. So when you're looking for liquidity, where is it? It's really obvious. It's here, yeah, on the higher time frames. And that's typically where the markets are going to be driven by on the daily, the weekly charts, etc. Now, the other bit of confluence we had here that was just beautiful was this bearish gap. Yeah. So look at the bearish gap. What happened? We closed below these equal lows, right? So then we see that as a key low. We're then looking for that retest to sell off. And then we also, after the close of this candle, create this bearish gap. So we've got double confluence here, right? Ultimately, what we didn't manage to do, which was the plan for this, was we either close below and move for this low, which is why this was drawn in, or we come below the equal lows, recover them from that liquidity pool, and then we move to then recover this. Obviously, that didn't happen, but it shows the importance of why we never want to try and enforce our bias on the market. I might have thought the market would go up whatever to 3.5 at that point, right? It doesn't matter. When this happens, I immediately change my opinion. I don't care about being right. I care about being profitable. So as much as I can think the market's going up here, or it's a good place for it to do so, which it was, had a decent retrace on the Fibonacci, we took out equal lows, gave us a really good area and clear air ahead to get back up to this high, but it didn't want it. Market wasn't ready. So when it tells us that here, and we see the rejection, remember, we're always short from bullish gaps, from bearish gaps, sorry, and long from bullish gaps unless they get inverted. So what happened here? Even if we're looking across at this gap here, I wasn't as concerned about the inversion was a nice touch here, but when we started closing above the 50% here after rebalancing it, and we stepped into a bullish structure here, I was pretty confident we were moving higher. Anyway, that this gave us really good confirmation. All right. Now, what else gave us early stage confirmation? We swept these lows out. Yeah. Again, bearish gap in here. We expect initial rejection from this. So price swept out the low, came into the bearish gap. As you come into here, you're then looking to go short. So maybe you get stopped out here. But the market, look, you're paying for information. Yeah, we call it paying your tax. All right. And that's where you step into the market and you say, okay, well, I'm paying for information here. So I'm short here because it's currently a bearish gap until we close above it. Just to give you an example. Yeah. So price steps in towards that. I'm looking to short this. We've taken out liquidity here. Every time we've taken that key level, price is moving low. We closed below this low. So I'm saying, okay, the fact that we closed back above it and retested it, by the way, should have been a little indication that we were going higher. However, we still don't know if we're going to get past this gap. So at this point, I'm saying, okay, the likelihood the price is going to do this, and then we're going to move lower. So you wait for that to play out. So you position yourself short, lovely. Maybe you make a little bit of money. Maybe you don't. Maybe you've still got that open targeting that low. Boom, your stop loss gets taken out. Okay, no problem. Well, what's just happened here? This gap has been rebalanced. Excuse me, meaning that I'm now not looking at it as clearly as an area that's going to provide a rejection. I would have expected price's body to hold below the 50% of the gap in an ideal world. More so with traditional markets again than crypto. Just depends how liquid the markets are. But when this happens, I'm saying, okay, now I'm looking higher. All right. And then I can say, well, if I want more confirmation, I want to see price close above, which we get there. So now I need to just identify where the liquidity is high. Now we've got this low, which is capping price because we closed below and retested it. But I want to see gaps. I want to see highs and lows. And we look just above it here. You can see you've got this swing higher, yeah, or this high, yeah, before price sells off. So then you've got a clear plan, a clear target. You can step on board into the charts and say, okay. Then when you get to here, you can wait the same. Like we said, we had this bearish gap across here. We rebalanced it here, meaning that we can look to these order blocks to hold and then for price to ultimately continue to push up. All right. And that's where we are. And with Pendle at the moment, we're kind of coming back into this area here. Now, something I would say here is that I'm not looking so much at this red box to reject price, but this high here is going to be really key for the next stage of this. Okay, so let me just draw this across here a little bit. I'm going to extend this across as well. As we've seen with these highs and lows, what I want to see from price here is I want to see price get a good expansion across here and then retest this for us, confirm it as support. Yeah, and then we're up in and around the 50% of this. So then looking for this to push up into these highs. However, I am very aware that, from this line and above, this is still a bearish gap. But at the moment, more interested in the momentum that we're making here on a bullish scale. So I would still favor that to look for those longs, but I would be doing so quite cautiously, all right, because we could still easily see a rejection in here. In terms of a 4-hour play, if we're expecting price to head up to this high here, all right, then I've got to say, all right, well, what do I want to see? Well, we can see here at the moment this order block's holding. So while that continues, we've got 12 minutes until the close of this. Be lovely to see price close above these down close candles here. Just show us that we're getting that continuation, because if we look back here, Yeah, so you got the down close candles here. What happened? Price closed above, we get continuation. All right. What then happened here? Price closed above, lovely retest, we get continuation. Price closed above, retest, continuation. You get the point, right? So we're looking for this staircase pattern to hold on the way up. If we start violating them, one thing I would say is that there's a lot of balanced price action below us. We see there's no real gaps. Any gaps that there are have been filled here and here, but we do have this low here. So if we did start to break down here, then I would expect price to come to in and around this area and this order block down there. So let's take a look at Pepe. Pepe's just been on an absolute tear, hasn't it? Hang on. Right, here we go. Horace, hello mate. I see you don't use volume, just market structure and price action. Yeah, absolutely. I do use volume for certain things, like I not on here so much. There's certain things that I'll do with liquidity mapping and bits and pieces sometimes, but to be honest, I really try and just strip away all the noise just purely to the charts. I am someone that's very, very deeply engaged with what's going on with the news. You know, I have a wonderful team that work around me for the fundamental aspects. Obviously, I've got a team of traders that work with me as well. For those of you that don't know, I'm head of trading for the Bird Nest, which is Crypto Bird's company. We've got 5 other magnificent traders ranging from fundamental, systematic, swing position traders in the team as well. So I do lean on that, but I am very, very, very much traditional market guy as well. I like to see what's going on in traditional markets, like to see that picture for risk. Once I've got that kind of general idea in my mind, I try and set every day up as an intraday trader to work out just basically whether I'm long or short biased for that day. And then I'm looking to decant those setups and always execute based on price action. Yeah, simple creature, my friend. Very, very simple. So this was really key here on Pepe. Again, you notice I'm going through the same things again. Like to keep these things simple, as Horace here alludes to as well. So when we're coming into these key levels, what happens, right? We just dropped into this, we get no close. Also, Horace, as well, one of the things I'm looking at is to get a depiction of volume based on the candles, yeah, to see where the real trading was done. Like here, for example, will be a huge volume candle. Obvious to see once it's closed, but it then lets me know that, okay, actually, chances are very high here that now we've created this inefficiency, this gap. The buying pressure there is really strong when we revisit these areas, these inefficiencies. This is where the market's giving you the opportunity to get back on board. All right. Ultimately, when you then violate those areas, you're then looking for liquidity lower down. Okay. So as we look at this was really where we saw the first stage recovery, as we have done with the other altcoins. Had we closed below here, I would have been targeting this low here, which is within this gap. Again, a really key liquidity pool. So on the weekly, it gave us early stage signs that we're just looking for a bounce. And when I'm looking for a bounce, I'm asking myself as I look higher, I said, all right, well, where could price lead to? Let's just use this as a reverse example here, right? So here we had that nice break. So I was looking to long this. Yes, it's high. Yes, you're long in the effing top. Don't care. Done it loads of times before in crypto. If we get the right setups and signals, we're ready to rock and roll. However, if you do that and you're wrong and price closes back underneath, well, you know you're wrong, accept you're wrong, and then say, well, where's the next liquidity resting? Is this low? Yeah. Ultimately, look how well this low did to support price until we closed below it, retested it, and then sold off. All right. So the reason I'm giving that example is because it's what I'm looking at down here. Price failing to displace below this, so failing to get any body closure below it. Then once it held this level and came back up, I'm just looking higher and saying, really, where's the market potentially heading? Loves to rebalance these inefficiencies, these gaps, right? So I'm looking higher towards this and I'm saying, okay, well, actually, when you see my charts as well, guys, these boxes, whether they're the gaps or whether they're bullish or bearish, will be grey. I do them on these shows just to really stand out the fact that this is bearish. So I think this is what's drawing price here. And we're going to do one or two things when we get there. I think we do this and then we come lower. Or ultimately we close above it, retest it, and then look to move higher, right? And that's just the simple thought process that I have. This very small order block here might cause an issue, but ultimately I'm looking for this to be the main draw on liquidity. Thanks, Horace. I like you too. You seem like a cool dude. You can grab me on Twitter, mate. My handle's BC Richfield. It's just on the screen for anybody that's interested. Do come along, give us a like, give us a follow. So close to 10,000 followers now, which seems like such a small amount. Never really been that interested in Twitter followers and that. But actually now I'm kind of getting close to that 10K mark. I'd really, it would be cool to get over it. But if you do like the content, do come along and let me know. So on a daily scale, we had an even better reaction here. I mean, look at this V-shaped recovery, right? Whenever you see price moving to a level and very sharply recover it, I always use a really terrible analogy for my students, which I'm sure will make a few of them laugh today if they're on the show, which is the idea of grabbing a hot pan. Yeah. So you walk into the kitchen and there's a pan on the side and you think it needs to be put away in the drawer. You grab it and the bastard thing is searing hot. You really cannot hold that thing for very long. You grab it and you chuck it away. It's like, Christ. Or an even better analogy, which is the bouncing ball analogy, meaning that if you've got a really bouncy ball, yeah, bang, you see that very, very quick reaction into the floor, aggressive move away. If the ball's not so bouncy, what you tend to see is kind of a little diminished thing, and then ultimately it kind of falls off the ledge. Yeah. So that's what we're kind of looking for here. You're looking for how aggressive those reactions are. So if we're looking to play the bounce, we see this is the deviation. Again, look, price steps back into this level here. Your first point of confirmation would have been the close above this, which sets our bullish order block. All right. Now, as we set above here, what I typically do with these is I'm looking for 50%, right, order block. So for me, I used consecutive or single candles, the flat of the body in this case for a bullish one. Let me just do this. I just want to see it kind of holding above the 50% area here. Yeah, so like, for example, when we close below this here, not really kind of that concerned about price starting to sell off here. All right, what I'm actually looking at this for was this bearish gap at the time. Yeah, price stepping in, rejecting this bearish gap, rejecting here. This is where it's very, very difficult. You need to remain patient. You either want to see price reject a bit deeper, in which case then you're then pretty certain that it's coming for this low, or you see this area reclaimed here. This wick rebalances this gap, so this becomes less of an issue. Close above it here, meaning that pullbacks to this area, and then for buying. At the moment with Pepe, we're kind of arguing with this gap higher, all right? So it's just a swing higher within a fair value gap, right? Or within a gap. We have rebalanced it with this wick, right? But I would really like to see price close above this high. And that's kind of where I am with Pepe, really. All these kind of fast expansion moves higher are very, very difficult to get involved with. So I'm going to base this on the daily. And I'm going to say, okay, we close above this on the daily. I'm willing to accept drawbacks to this kind of area here before moving higher. If we wick back down and come back down beneath this, then maybe price is, looking to either retest this order block here or this gap. All right. Remember that this is our bullish gap, so we'll do this one in green. So that's the play. Wick back down below this, look to retest this area, look for longs here. If we close below this here, then this is the liquidity call I'm looking at. Swing low, swing low, swing low. Price coming in and taking those out, or low, depending on how you look at the charts. Awesome. Thank you, Horace, and thank you. I hate it here. That's awesome. A couple of followers closer to the first big milestone, which is wicked. Okay, so we're going to finish now on IOTA. Oh, that's interesting. I'm sure we had some TA, must have done it on a previous chart. So, okay, so here on the weekly with IOTA, this is nice actually, because this is slightly different. With most of these kind of crypto assets, we've seen them kind of holding key lows, right? Now with this one, we can see that we've done the same. It was a little bit messier, but then again, you can get that sometimes with these assets. Ultimately, as price kind of closes below here, there's no strong close. Remember I said that to you earlier? Whenever you see a doji candle, that's a sign of indecision, yeah? Same with this one, sign of indecision here, right? And then the market goes up, ultimately then comes back down again. So with this, if that had been a fuller body close, like, something more like that, I don't mind a little wick here, but you want to certainly see the longer wick to the upside to show you that selling pressure moving in. Then I would have been looking for these gaps down here and ultimately this low here to be taken out. But we didn't. What did we do? We stepped back in. So this week was telling us the price is looking for liquidity higher up. So on a weekly scale, this is my liquidity higher. So I've marked that in. If I then move to a daily, hey, look after yourself, Bernd. Always good to see you, my friend. Then as we look at it on the daily, we can say, okay, look, actually, price did step back in here, right? And then if you want to do this, by the way, when you're re-looking at charts, make sure that you do something like this, right? Take one of these arrows. Yeah, you can access these on the sidebar menu here. Yeah. And then if you click the little stars next to any of these things on here, yeah, then it will add them to your toolbar down here, which you can kind of move around. So with this one here, it's really good because what I see people doing often they make the mistake of saying, this candle closed back above this level, so I would have been long from here. You wouldn't. Candle needs to close, so actually the arrow needs to go on the next candle. Then it helps you, because then when you move to lower time frames, you might have mistakenly thought that you would have gone long from here. So when you test, you're basically testing incorrectly, right? Not saying you are doing that, but I've seen so many students over the years do that. I've worked with people that have as well. So look, from here we were long. Okay, fine. So what does that mean? Well, quite simply, we can then say, okay, are we respecting, these down close candles? Prices come in, we're still within this order block here. If this is telling us to be long, then we would ignore the fact that we close below this up close candle here. Or you would have to wait for price to have done this, which means that this would have been your bullish day starting today. And then on the 4 hour, the plan that we put in place is really, really simple. Remember, what we're looking for is for price to draw down into an area, a bullish point of interest, right? We need it to see, we want to see it sweep a low, ideally react at a gap, or at the very worst, you're looking for price to draw down into order blocks. And I'll tell you a little, not a secret here, but I think what I see from the very, very best traders is the patience to wait for these areas to develop, and then when you're in them, having a very, very simple system to execute. So for me, for example, I like to see price react by doing this. And you'll see these examples on here. I'm going to do this just before we finish up, because I do have a lot of people ask me about entry triggers and stuff, right? And at the end of the day, and SZ always used to say this to people, and that's a guy I owe a lot, actually I learned a lot from him over the years, is that actually your entry isn't as important as just making sure that you understand where price is heading, or that you've got a clear plan on that, right? But we come into a key area like this, so like for example, we're in this high time frame bullish gap. What I want to see is, I want to see price sweeping a low, and then breaking the high that swept the low. And in doing that, I want to see displacement, meaning I want to then see a bullish gap made in here. And then you can just take a return play to here. You can enter on that line. All right. So if we overlay this idea of a fractal pattern here, what have we got? Price driving down, driving down. Do we have any big recoveries here? No, price is driving down. So where do we first sweep liquidity? From equal lows, no less. Great liquidity pool. Then what do we look for? Where's the high that swept that low? It's here. So then looking for this is our first shifting structure. It's a market structure shift. Do we leave a gap in that shift? We do. Is it clear and obvious? Yes, it is. So ultimately what I'm looking to do here is I can be a buyer at this gap. You can even you can put your limit order above it here. Ultimately you shifted structure, you're waiting for the gap to develop. It develops when price moves up to here, as it draws back down, stops under the low, and then as you look across here, this wick immediately should stand out to you as a key liquidity point, because something aggressively shunted the market down and caused this area to act as resistance. You can then zoom back out to your 4 hour chart. You always want to ideally use the higher time frame charts as your targeting, right? So that you don't get too caught up in the noise. And ultimately with this one at the moment, if you're involved in this IOTA long, then I think we've really ripped through that level here. Looking up over to here, and obviously, price can just stop in the middle of nowhere, but that's really the next level I'd be looking for this to come into. This is very balanced price down here. So I think this high here, but ultimately this high here that exists within this gap is the real kind of key draw on liquidity here, I think. So again, IOTA's kind of already left the station. If I was looking to get involved in this, we're respecting this gap down here, right? This gap under here, I mean. So this is the recent order block that we've set. So pullbacks to this order block could give us an opportunity to look for longs in the same way as we did down here, being patient and just waiting for that kind of fractal pattern here to emerge. All right, again, these won't always work for you. A lot of it's going to be based around where you're taking these entries from. Always manage your risk, always trade safe. And on that note, ladies and gentlemen, I am going to let you go for the week. It's been fantastic to be with you live Monday, Wednesday. Big shout out, thank you for everybody that sent messages and for everybody that's engaged with this. It really has, I really love doing these shows, and we seem to get a really, really lovely group of people who are very, very keen to change their lives for the better, and hopefully trying to share some of my experiences across traditional markets and with crypto, kind of help a little bit with that. If you want to know anything more about me, anything more about the Bird Nest, where I trade with my trading team, and the awesome Crypto Bird, you can find all this information down in the description. And yeah, come and give me a follow on Twitter. Come and reach out. Come and grab yourself a free trial or a membership to the Nest, and we'll go and have a chat over there. For anybody that's here today that are members, we'll be starting the live trading show in about 14 minutes, 13, 14 minutes from now. Just need to go and make myself a cup of tea, grab my boiled eggs that are sat on the side, part of this new aggressive diet that I'm on, and then we'll rock from there. Everybody that's been live today, far too many of you, but Amir, Horace, Dominic, thank you very much for coming in. Amir, thank you as well. NBA Youngbelief, my friend. Great to see you. Great to see you. Obviously, Evil Gemini Burn, who's left us as well. I hate you here. Gordon, all the way from Bedford as well. Nit, who was on with us earlier too. B, Dominic, Altcoin Hodler, Robert, and anybody else that I've missed out. Apologies if I had almost 3,000 of you live today, which was really, really cool. I look forward to seeing you all again on Monday. And for any of you that are trading with us, I will see you on the live show in about 12 minutes from now. Have a fantastic week, everyone, and be safe out there.
Hey everybody, it's Adrian Zdunchik, CMT chart market technician, CryptoBird, and here we are on the second episode of our RWA session on the hidden revolution, because we are here to talk about the next deeper corners, the deeper down the rabbit hole as we go, about unlocking the wealth, and we're gonna discover the entire magic of tokenization. And here we are, joined by our highly esteemed guest to discuss this very topic today, by Paweł Łaskarzewski of Nomad Fulcrum, and by Andrei Grachev, who is the leader, the CEO, and the head of DWF Labs. How are we doing, gentlemen?
I feel very, very good. The weather is good. The market is hopefully will go up very soon, and I'm super bullish on that.
Right on. Andrei, I have a question, right? Because what your Twitter bio is very enigmatic, and what it tells you is it crazy about extreme sports, winter, racing, and competition, crypto trading and investment, veteran, dog lover, and the head of the DWF Labs. Why is the DWF Labs at the very beginning of this incredible series, every achievement? At the very end, I should say, yeah.
Sorry, why did we for Labs what?
So DWF Labs is at the very last position, of the Twitter bio. That's what I mean, right?
I understand. Yeah, look, I think because it is, it is kind of explanation of myself, right? And me personally, it's first, I'm a human, right? I'm a person. Then I'm a business, right? That's why this is my kind of character. And then that I lead the DWF Labs. Yeah.
Love it. There's so much to be said about that, actually. And that entire tokenization topic on its own is getting a lot of traction, is getting a lot of attention from the traditional finance, from the Web3 decentralized finance as well. As, for instance, we have people like Larry Fink of the BlackRock, of the biggest ETF issuer, right, their provider. I believe, he says, the next generation for markets, the next generation for securities will be tokenization of securities. No middlemen. We're going to bring down fees even more because of that, dramatically changing the whole ecosystem. And there's another one from Vitalik Buterin, who is a founder of Ethereum. We have so many memes flying all around the internet, with Vitalik basically doing no matter what, he always does it as a head of Ethereum, as a founder of Ethereum. One of them is basically very influential. And he says that if you can make a stablecoin that can actually survive anything up to and including a US dollar hyperinflation, that's a huge opportunity. As well, if you can create something that will feel like a lifeline for everyone going through that situation. So he's talking about hedging. And what do we make out of that, Andrei? What do we make out of those bold statements, those bold words?
I think, look, the bold statements are regarding, the boss mentioned that remove middlemen to make things more transparent, to step away from hyperinflation of US dollar or any other fiat currency, right? But I think the more about, a new paradigm of how people and companies and investors interact with investment assets, with real world assets, with tradable assets, and how they store it, and how regulators and governments and society can control it. Yeah, that's my opinion about it.
Paweł, what do we make out of that?
So I believe that, as I saying very often, that we are at the very beginning of that road, that all the big names in the financial space are joining the race for tokenization. Like we have BlackRock, we have Citibank, we have Santander, but we have all the biggest ones. And what they are looking for in it for themselves is right now they are limited with assets that are available publicly. You can trade them. Blockchain solve the problem. You can trade anything. You can trade milk. You can trade those cups. You can trade the shares in the Burp Nest or DW or anything. All the things that were unpublic before and were not tradable for average users right now become tradable. So I believe this is a big, as it has been mentioned seconds ago, it's a paradigm shift. It's a paradigm shift where we're going to have access to everything on chain in the form of tokenized assets, and all elements of anything we can figure it out and everything we can imagine is going to be tokenized. Why? Because there is a big niche and there is a big need for users to not having not being pushed to use all the intermediates that they need to do right now. For example, today you want to buy a Tesla stock and you are in Poland, you are using Polish broker. You are never buying a Tesla stock. You're buying an artificial ART, which is like a financial product that pretends to be a Tesla stock. Because to buy a Tesla stock, you need to open an account in the brokerage firm in US. With blockchain, you can just trade it. You can just swap the asset that is on chain. That's it, done. So that's why I believe that this market is going to be simplified, which will reduce fees. Why? Because there are no intermediates, which will reduce fees because on blockchain it's much cheaper to settle transactions. You don't need to, connect 100 different systems in between. So I believe that the most important thing that we are taking out from that quote is it's a paradigm shift. It's a lifetime opportunity to capitalize on, like internet in 2000. That tokenization is the internet of 2000 for us today.
I got it. So, to put it in the very simple words, to put it in very layman terms, what I'm thinking is, if I'm new to the market, right? I want to learn about tokenization. There are some basic concepts, right? And here we are, of course, Larry Thing and Vitalik Buterin, obviously, they are known for talking about very general terms, very general broad names, broad statements. It's very difficult for me to get to know the very basic concepts, right? So what I as a layman should start from by learning about those concepts? What concepts are there, and what should I know about them?
Regarding tokenization, I think you
Correct.
should start with, from my point of view, the best tokenization example like Tether, because it literally tokenized fiat assets, right? Yes, it seems it's currency, but it's tokenized currency, right? And you can see how easy and how efficient you can use it. When you can send money, let's say, from Poland to Uzbekistan, let's just go and try to do it with bank.
Mm-hmm.
And
Good luck.
How much time would it take? It's possible, but it's less efficient, right? And it's very bright example.
Yeah, I'm with you. So the basic concepts, Pavel. What basic concepts do we think of when we think about tokenization?
So I believe, like, I will also refer to what have been said, like, in a seconds ago. Like, depends on from which perspective also we are speaking about, like from the user perspective or from the company perspective or founder perspective. So from the user perspective, I believe that users should join blockchain, just do some basic stuff. Why? Because they will understand the concept of ownership. Because if you are telling people about the blockchain, they don't understand what does it mean, ownership. Like, I have money in the bank account, I can have money on blockchain. What is the difference? They will see that in bank, it's the number in the company that owns your capital. You are basically lease taker of that money. And you need to ask this bank to make a transfer. And on the blockchain, you will feel the ownership of the assets. Nobody can take it from you. You can do whatever you want. You can burn them, you can send them, you can do nothing, right? So that's very important to start with that, to understand the basic concept behind tokenization, that you might be an owner of those, the real owner of those assets. So from the company point of view, the main concepts that are from the founders, like the people that will try in the future to monetize on or to build something, the main concept that I believe are the most important for the founders is to understand the flaws of the current ecosystem and the limitations. One example, like we might have a Berkshire Hathaway. Everyone knows Omaha Oracle, Warren Buffett, Berkshire Hathaway. Berkshire Hathaway have two series of stocks, Series A and Series B. Series B is like, I don't know, 1,000 per stock, something like very low amount. But Series A is 700,000 per one share, which means nobody trades on that. But a lot of people would like to have a portion of this, of that. So with tokenization, first, you can fractionalize things. So we can split them into the pieces, and those pieces can be tradable. Why do I need to own like the whole share once I can own a small portion of that share, right? And have also exposure onto the market. So far, it was a problem because let's say Berkshire Hathaway is paying dividends. So if you would have hundreds of millions users having a small share, how they can distribute this dividend to those users, right? So most probably 50% of that dividend would be spent on transfer of those profits, on the distribution cost. On blockchain, the whole distribution of that will cost you like $1 because it's deployment of the smart contract that will distribute this to the user. So the very important element is to understand the base concepts, why the real world and the normal financial ecosystem and the world that we know outside of blockchain, outside of crypto, can benefit from tokenization, which is fractionalization, which is transactionability 24/7. Today, I can send my money through SWIFT from Monday to Friday, from 9 to 5. Why? Because my bank is working between those hours. After that, they will not having an in and out sessions on the money. Why? Does internet not working anymore or what? Right?
Mhm.
So those are those issues that we have in here, and the basic concept should be the ones that are fixing the traditional world with solutions that blockchain can provide, and the limitation of traditional market. So those would be my idea if someone thinks about this in such a direction.
Okay, it makes sense. And Andre, you're obviously the leader, the head of DWF Labs, right? That is, for everybody who's not familiar just yet, highly encouraged to go and visit their X profile at DWF Labs. They are the big investment, basically, vehicle in the market maker for a lot of Web3 projects right there. They are very popular name. One of those names that I truly look up to, and I admire your work. And with so much experience in Web3, Andre, how does it look? What does it look like to tokenize an asset from your perspective? What does it mean?
First of all, right, as Pavel said, it's smart contract work, right? But it's technical work. I think if we're talking about tokenization, this thing has a little bit more complexity because we need to make sure that underlying assets exists, right, and store it correctly. And those people who use these tokenized assets can have access to these underlying assets just in case, right? And I think talking about tokenization, right, and what this big guy said, that no intermediate, no middlemen, right, less cost. This is true, but it would remove existing middlemen, but it would create another middleman that will take care of providing trust. It is not upgrade of the system. It is changing the system, but it's still system. And second point about tokenization, right? When we are talking about, crypto, blockchain, especially mainstream media, right? That it's some private stuff, some shady things happen there. In mainstream, it looks like this, but in reality, it literally is not like this. Because in blockchain and tokenized assets, you can check and you can trace each transaction. You can trace each fraction. You can know each owner. And if we are talking about reward assets, I'm more than sure that in 99% of cases, it won't be like decentralized Uniswap. It would be something with at least digital identity. And those who have access to this ledger will know everything and will trace everything. This is also important to know. It's not good, it's not bad, it's just
Different.
Yes.
It is who it is.
So what are we fixing here, Pavel?
So what are we fixing? We are fixing one very important thing, like a lot of limitations of the previous system. Like why? Like one of the answers, very simple one. Why today we can buy stocks on stock exchange from Monday to Friday from 9 to 5 is because how the market looked like, how you were buying stocks 50 years ago. There was a floor desk and there was the people with those papers in their hands shouting to each other. So the first version of the stock exchange system was the recreation of the same process that they knew. So right now we will have an evolution of the current system to be much more transparent, much more interesting from the user point of view, where you can really own that asset on your ledger, right? But on your wallet. But at the end, RWA asset is backed by something. So there is a real world asset behind the tokenized asset, right? So for example, in case of stablecoins, we seen Circle drop on the price 20%, and this 20% drop on the price of Circle was not because bank crashed. It was because 20% of the cash that Circle owned was on the account in that bank. So everyone knew that that might be a loss, and that's why the defect happened. So as it has been mentioned seconds ago, the important element that we need to understand also is not that tokenization is moving the whole world of traditional finances into the crypto, and we are disrupting the system will not exist anymore. It will exist because this money needs to be stored somewhere. CBDCs, of course, are a whole another story, because CBDCs is a money on chain, so it's a little bit different thing. But all the other things, most probably for the next decade, or a little bit less, a little bit more, will still be stored in those old legacy systems. Right now, you have a property, for example. The property needs to be saved in the registry of all the properties and owners and everything. And usually this is paper-based. For example, in Poland, like you need to go to the notary, sign the agreement. So if those things are not going to be changed, and they are not going to be changed too fast worldwide, then we will have something like 2.5. So it's going to be a combination of traditional market together with technology of blockchain that is making this world much more digital, much more simpler, making transaction much easier. And the most important thing is that it allows us to swap any asset into any other asset. So for example, I can buy a ticket for the concert of Justin Timberlake, that is digital one, using my Tesla stocks. And I'm just paying with using Tesla stocks because they have value, right? And they can be cashed out immediately. And I can make that kind of swap in between. So blockchain is a digital layer to exchange any kind of digital assets. So that's why tokenization is so important, because you can exchange anything to anything. I can give you 5 stocks of Nomad Fulcrum, for example, for 5 stocks of DWF, and we can do such a swap on blockchain. On traditional market, not possible without agreements, without lawyers, without changing all the registries, sending this to the court so they can register, and it's taking 5 months. And in here, one swap, 20 seconds, because that's the length of the block, right? So that's what we are fixing in here.
As it's spectacular what you mentioned. We are on the top down kind of like an approach attitude. So let's talk about and delve deeper how it actually works, right? How it works to tokenize an asset. And we have a map right here with the mechanics, how it all works with the entire mechanism, kind of like broken down to the pieces. So what we're looking at is the deal origination at the very top position, right? As it follows, asset tokenization project is identified, right? There's a need, there is a discussion, there is an idea, there's a concept, followed with by discussions with the issuer, the tokenization platform, and other relevant parties right there. Then we have we have a point about structuring. So how do we take all of those points? Are they legally kind of like separate, and we legally kind of like distinctly go for each phase, and there is a regulator, there is an authority confirming each stage, or we kind of like go all of it, just try to go Wild West, try to design something alongside this map and just propose it to them? How does it look in practice? From your side, Andre, as well, let's say.
From my point of view, every plan is great, it's always better to have a plan than to not.
Until you get punched in the face, right?
It's, but
Mike
the
Tyson.
history says, right, that not any plan works like how it was planned, right?
Yeah,
And
yeah.
this everything nice, but I would say this is kind of in between, the old system and the new system. Because, for example, if the token, let's take a look at the point number 6 from top to bottom, right?
Correct.
If the token is tradable on secondary exchange, if this token is not tradable on the secondary exchange, this tokenization makes zero sense, right? We just put a different form of electronic asset and name it tokenization. It's just useless, right? I think it will take several iterations that will definitely create some errors, some mistakes, maybe some catastrophes for some people, some firm, right? But also some nice things, right? And we have a learning curve, and we need to go through it. That's what I'm thinking about.
Got it. Yeah, yeah. I mean, I fully agree right now with your take, Pavel. In a second, right? I just wanted to highlight that I truly love this saying from Mike Tyson, right? What he always mentioned, and that's the quote of the lifetime, I suppose. Everybody's got a plan until they get punched in the face, right? That's a golden line that applies so universally, that it applies so well in life and business. It's just ridiculously accurate, right? Pavel, what does it look like in the very details, with this map? What do we make out of that if we want to tokenize an asset?
Yeah. So one of the things I will add to what have been said like a minute ago is that right now we are in the exploration space. So different organizations are exploring different business models, different ways to tokenize, different plans. Some are failing, some are doing a good job, some are not, taking into account the regulatory aspect, and then most probably in the future they were gonna have a big issue. But it's an exploration space. So, and for the last couple of years, we had a lot of exploration in that area of this institutional tokenization, RWAs, this and that. And the reason why regulations are being put right now, like not 10 years ago, is because if you would put regulations 10 years ago, that would kill the market. Like blockchain would never grow if the regulations would be done.
Yeah.
So that's why we are implementing this today, like 10, 12, 15 years later. It was the same with internet. During the dot-com bubble, there was zero regulation on internet on anything, and everyone was doing everything. A lot of scams, insane valuations, insane races. Sounds similar, right, to what we have right now in the crypto space. So and that was the same. They gave a chance for the market to grow, to expand, to test the different business models, and then they implemented regulations. Because if you are doing this at the very beginning, that is killing the market. So that's a good thing. So from what we can take out from that chart that you are showing right now, for anyone that would like to tokenize anything, is that right now the whole world is moving towards regulation. So like in 2 years, 3 years from now, we will have regulations everywhere. They're going to be most probably very similar to each other. Right now, Mika, this year, first part have been introduced. The second part will going to be introduced by the end of that year, which means European companies that wants to operate in Europe in a legal way, they need to be regulated somehow. They need to at least read if the assets they want to create are falling onto that. So even on the planning phase, even on the idea phase, you need to take into account, geez, right now we have a lot of regulation in the US, in here. Where are my markets? Where I want to approach the users at the end? So what kind of regulations I need to implement? And you need to start taking into account this part of the market. Like in 2021, 2020, 2016, you could forgot about that. You haven't had to think about regulations at all. You could just build DeFi protocols, ShMeFi protocols, gaming, whatsoever, and that was working because no one was checking anything. Right now, they took a verification methods, and they are starting to verifying us. So I believe one of the most important elements to take out from that from the very beginning today, you should validate if